NYSE, gap open down. Big day today, 8/2/2012, 6:14 a.m. Pacific Standard Time. We had Mario Draghi come out and talk about your austerity packages that they're giving out. And then let it be known, as we said clearly all week, going into Thursday, would be that you would get that initial positive reaction, and the Dow was up 100 handles, and then the Dow went down. Right now, it's only down 70. It was down 89. NASDAQ futures were up 20 handles. Now they're only negative 16 handles. So pre-market futures volatility going into the open have been extremely horrendous. But if you know how to trade the bull and the bear in pre-market and use pre-market to get your setups, you can do quite well. Weight Watchers down 639, SAM down 6. Abercrombie and Fitch in the retail sector didn't do that well either. This KCG trade, that ran wild yesterday. MasterCard earnings, like I said, MasterCard is down 321. I knew that they would have to come down some, okay? And then you have some of the things in here that have been getting beaten down, but the gap open list starts at 100 pennies. That's $1 or higher. And it's fairly extensive today, I would say, off of all of that great news. The gap up list, there's a few little bright spots, but not many. And Cummings is another one that was beaten down, and so you got a little gap up in a few things here, and some of them are earnings related. Cummings is not. So once again, U.S. futures are down heavy. How to use the pre-market to gain control of that opening bell. We featured a lot of our shorts that we took. We have some index puts here, 2,500 that got on sale. We bought these once at 12 and sold them at 31. Look, they got all the way down to $7.15 yesterday. 670 traded. Those will gap up. They don't move a lot because they're out of the money, but they will have a nice gain. Another thing that we're going to be watching is how this Amazon reported a crappy earnings, ran up to the 240 handle, the kiss goodbye forever after that. Print right back at 230, still has a long ways to go down. One of the other things that we're going to be watching is how we've been short this price line. And how one of our MNTs, when it got down to 618, traded up there a little above about 685, dropped $50. Just like it went up, is just like it went down. And that's called making money on that and taking advantage of volatility. Our job here is to guide you, train you, and let you understand where the support and resistance channels have been for the last 6 weeks, since June 4th. Today is 8/2. They're starting the calendar month of August out not in the greatest way. Now, FOMC meeting here in the U.S. was here the other day, talking earlier in the week. Ben Bernanke, QE3. However, they didn't get what they wanted out of there, and it's a worldwide central bankers just trying to print and flood the system with money that, they put the world in a slow growth. Now, markets are going to be markets. It's the dog days of August. The bell's going to open up. We're going to use the left elbow gap down when stocks hit support and want to bounce up to the resistance before rolling over and making lower lows and establishing how things make lower lows, just like they make higher highs. But today, we're going to look and see where the strong names, and Google's still a strong stock. It's just that it was a little overbought and we had to go short. But we will get net long off of this bottom on the 625 calls. So we have a lot of things that are going on in pre-market. How to use pre-market to get positions. How to square into that opening bell. That first 15-minute bar, that first half an hour, 45 minutes, and then ultimately the first hour of the market. And how, just like the last hour, but how that first hour is going to have that huge volatility. And as we said, we were looking for an increase in volatility both ways. Volatility to the upside, but then you have to have some reversal volatility. And that's what we have going over here. And reversal volatility and strong stocks still that get overbought in the short term, we will make the trades on the call side off the bottom here. Because we've got wholesale over here in the 640 put, 635, 630 regular. This side of the market, and excuse me, I have these cold. They're 940 by 990, and they're going to bring it right down on this gap down. I'm going to give bids out here in pre-market, and I'm going to give them right now, and I'm going to give this one at $4.60 to go long right here on that 625 call. That means, though, in order to see that price, and it's a weekly A3 2012, we're going to use it. The market's going to open in 10 minutes, and I'll talk with the MMTs offline here. You have your update in pre-market. You have your worldwide futures. They have been about as volatile as going on a roller coaster ride. Okay? And once again, comments out of Mario Draghi offered no new policy course. The risk-off sentiment is spreading through the markets. European indices have swung from session highs to session lows in minutes. Session lows in minutes. Right after he got done talking. Then we had the night capital problem yesterday and the high frequency. Retail will suffer again because of slower growth. Abercrombie and Fitch has been downgraded again. So as we look at support levels and we look at the current sentiment levels, we look at the price volatility overall, we have lots of opportunity on 8/2/2012. We have a roller coaster futures market. NASDAQ futures versus fair value right now is minus 20. Okay. So once again, when stocks pop to resistances, price volatility is to get, downside volatility. And just like you get the upside volatility, it goes both ways.